Okay, so I wanted to do this in during market hours, and I wanted to do it on an expiry day. You guys can't hear me? Hello, hello, hello. Dilip is saying,
Yes, we can hear you.
all right, cool, cool, cool. So I am audible. So um, zero DT is sort of all the rage. Um, Everybody wants to trade expiry. And Abhi, in fact, one deterrent to that is NSE has through SEBI, they've removed this uh, all these weekly expiries. But still, like people are quite interested in trading expiries or expiry week. And um, for somebody who's, I mean, if you have an algo that you've built on algo test and you've back tested it, okay, that's one approach to take. You can play that game, the weekly trading, and in there you're not really looking at wall space, right? You're looking at price space. The entire algo test ecosystem, or at least the algo side, is based on price space. Okay, hey, I'm gonna buy or sell based on some price action, either time based or price. Implicitly, there are volatility bets that you're making, but that has been sort of abstracted away from you. Even your stop losses are essentially delta rebalances, but we see them as stop losses. We call them stop losses. Um, when you do a re-entry, that's essentially a rebalance that's happening. The delta of your profile of your position is changing, and more often than not, when you do a re-entry on algo test, re-entry ASAP with um, square of all legs set, that essentially means that, hey, my straddle or my strangle, whatever I've sold, the delta is now is beyond a certain limit where I want to just rebalance back to where I started with. And so essentially, like, you're making a lot of um, volatility driven decisions implicitly, but explicitly you guys are just looking at price space. Okay, na? Um, if you want to look at, so I'm sort of like building a case for, now that we are all beginner vol traders, or at least thinking about volatility. Um, and for most people who are here, I know there's a lot of new guys here. So the new batch, which starts next week or the week after that, um, the idea is to start building your intuition on volatility and putting trades on by looking at the market with the volatility lens. And zero DT is a horrible framework, um, or like is a horrible choice of expiry to trade when you're just beginning as a volatility trader. Well, technically, there's no, real difference between zero DT and any other option. And there's some like pros of learning while using zero DT versus, and there are cons as well. Um, um, like the biggest pro is that, I mean, it's essentially like time. ठीक है ना? Like if you're trading a 3 month option and you're trading a zero DT option or a 1 week expiry option, essentially all the things that could have happened in 3 months is now compressed to 2 days, 3 days, one day. Again, there's a lot that could actually happen. Options are really, really complex instruments. There is convexity, there's leverage, um, and there's just so interplay of so many different things, right? So, um, even though in theory there's no difference, in practice there is quite a bit of difference. And for beginners, um, like a pro of using zero DT options is, you'll get feedback very quickly. If you make a mistake, you'll get, um, and you are going to make a mistake. Everybody makes mistakes. I still make dumb decisions from time to time, right? So you'll get feedback very quickly, so you can learn very quickly, because that thing happens every day if you're doing zero DT. Um, in the case of if I'm doing like a 2 month option, if I'm selling a 2 month option or buying a 2 month option, I know you can like look at your PNL every day, but it's not really going to change very much. You're not really gonna get a lot of feedback there. So you are going to get a lot of feedback in 0DT. Um, and the changes in Greeks, like even like weird concepts like your delta also decays, like I never talked about that because it's not something that is relevant if you're trading 2 months out. And if you're a beginner, there's just so much information for you to actually grasp. Okay, how do I think about, not only are we like learning what volatility is, um, not only are we learning what volatility is, we're also looking at the interplay of all the different things that affect option prices, right? There's volatility, time, the interplay between volatility and time. Though abhi ke liye I've tried to keep everything very, very simple, just give you the very, very basics. But I said, um, like I said in one of my lectures, every one of the lectures that I've taken, they're only 1 hour long. And I'm trying to sort of distill everything into the very, very basics, so that you get the maximum juice out of it so that you can start trading. But each one of these lessons could be its own chapter, could be its own sort of, what do you call it, course. Okay? Like we could actually have, there are just um, so many intricacies to whatever I'm teaching in each of these chapters, each of these lessons, that they could just have 5 episode, 6 episode courses on their own, right? And even then, you wouldn't like have a complete extensive understanding of all these things. So, um, like the screw up with 0DT is also going to be that, like there's so much information, um, and all the weird stuff that happens to options. Happens a lot quicker when they're close to expiry. So you wanna, like, what the decision that we are going to take is, we are going to um, try to avoid all that weird stuff and just focus on things that get us to start learning about volatility. Um, and like things can get like very, very bad very, very quickly in 0DT. Um, any like in these days, the volatility regime is, it's pretty low. And like it's not at its lowest. At one point, vol even breached 11, like VIX breached 11, but it's still in the 13, 14 range. If you look at the history of VIX, okay, it can go all the way down till 10, right? But if you look at the history of VIX, it can increase all the way up to like 100 also, right? So it has a lot of room to go up, but not a lot of room to go down. So in this regime that we are in, the only premium that exists if you're doing 0DT is near at the money. And at the money option with 7 hours to go is just a shit ton of gamma. It's insane how much gamma there is. And gamma is the thing that gives a lot of optionality to your option, and like gamma can just make your position flip from negative delta to positive delta just so quickly, or like flat delta to like huge delta so quickly. People complain about the market being rigged, all of that. It's just there's no rigging here. It's become more competitive. And if you can't make money now and you were easily able to make money 2 years ago, 3 years ago, it's just because there wasn't as much competition then, right? And there's no rigging that's happening over here. I can guarantee you. The more you double click on understanding how option works, like different participants who are trading options, like what are their motivations to hedging, um, the better idea you will have. And it's almost like, hey, if you don't have information, you'll be like, "Arey yaar, ye to rigged hai." But if you have the information, कि, hey, this is probably what happened. I've been in the market for 20 years, and there is no rigging that happens in the market. At least in public traded markets, uh, yes, there could be insider trading. There could be these kinds of things, but in the option space for index options like Nifty, I can say with a pretty good degree of confidence. And I didn't see that video that the other guy posted, one of you guys posted. But like I know enough to know that bhai Nifty index options mein, there's not going to be any rigging. And if the rigging is happening, it's not going to happen every week. It could happen once in a blue moon. Something crazy could happen, but it's not like every week, hey, let's do the rigging every week. Um, so anyway, um, yeah, so the bottom line is we're not going to look at 0DT, because we are learning how to trade volatility. And To isolate that effect of volatility as best as we can, we're going to go a little bit far out. Okay, 1 month, 2 months, आगे के options we're going to look, and we're only going to look at Nifty because there is liquidity in the 1 month and 2 month options in Nifty. Not so much in the other options, or I haven't seen any of the other indices. So we're going to drive our car at 20 kilometers an hour. We're not going to drive it at 200 kilometers an hour because that is what 0DT is. Okay, so let me just share my screen. Okay. Strategy builder. All right. So let me just show you a position that I've just recently built. It was a Feb-March time spread I built. तो क्या हुआ, पैसे आ रहे हैं क्या इसमें भी? Interesting. So what happened was, let me just replay this trade for you guys. ठीक है. अभी 3-4 days ago only I put this trade on. And nothing, no genius work here, just a good old time spread. So 3rd Feb, I put this trade on, that's a Monday. And so this is one of the ways in which you can extract VRP. My idea was, let's look at the position. I was like, "Arey yaar, let's sell this." I wanted to sell the at the money straddle of the first month option. And I had different ways of hedging this, right? You guys can see the simulator wala screen, right? Just post in the chat if you guys can. So if you guys can't, post in the chat, otherwise I'll keep going. So I put this trade on, market was down 1%. I didn't really care where the market was. I was just like, I was doing the dumb thing where I'm like, hey yaar, we've seen the data that the VRP exists and it's almost always there. So let's sell some options. And the time spread is one way of doing this. It's not something that you want to probably do as a beginner, start with as a beginner, but I keep one time spread going all the time anyway. So here I sold the 24 DT and I bought the 52D straddle, both straddles. And notice how I'm using different strikes over here because I'm doing at the money, I'm doing 50 delta, and 50 delta of the March expiry is going to have a different strike than the Feb expiry. Because the synthetic future is going to be valued differently. So yeah, I put this trade on, and as soon as I put this trade on, the market, so here it's saying 23,273 पे मैंने डाला था, and the market just went all the way up, right? So 600 point within a day. Like the next day, the market had one of the craziest rallies ever. Right. And if I were doing this in 0DT, I would have lost a shit ton of money. But if I would have been doing this in weekly options, just the gamma. So remember, guys, as I get closer to expiry, I have a much higher gamma. If I have a much higher gamma, my delta will move much, much faster. And in the case of short options, I will be given positions that I don't really want to take. Or like I'll be given the underlying position that I don't want to take. If the market is going up, I'm short. If the market is going down, I'm long. And I don't want that, right? So immediately the market just ripped up by 1% next day. उससे भी ऊपर गई थी, 1.5% हुई थी ना, 1.6% Nifty went up, right? So I had no opinion on Nifty. I'm just like, I have an opinion on volatility. My data is telling me, okay, I have maybe like 1 to 2 points of volatility spread, right? Yeah, there's a calendar spread, Shakti. So right now what we'll do is we'll just put a strangle or something, iron condor or something like that, right? So 4th Feb, as soon as couldn't have put the trade on at a worse time, right? I put the trade on and the market went up 1.5% on the very next day. And that's like a 1.6% move. You guys should check out the Discord. Is easily 16, like a 25 wall move, right? So I sold a 13 wall and like a 14 wall I sold, and the next day it gave me a 25 vol move, 25% realized volatility move, right? So I should be losing money, which I am losing here, right? Even though market went up, volatility came down a little bit, like the VIX came down a little bit, but I lost money because of the delta, right? Um, so I didn't really hedge. I didn't do anything. I'm just like writing the variance here. अभी यहाँ पे break even चल रहा है. I do have a little bit of delta, but it's not much. And if I really have to force myself to trade, I'm not going to put this trade on. I could probably just be like, you know what? One thing I could do is I could just restrike. I'll be like, chalo bhai, let's restrike over here so that I'm a little bit closer. Um, I would be required to restrike this as well then, right? तो ये भी sell करूंगा और मैं बोलूंगा चलो यार यहाँ पे आ जाओ, so that will give me like a flatter delta profile again, right? But I'm like, I don't really want to pay this transaction cost. I'm like, I'll keep this thing on for now. Let's clear this. And if I have more capital, I can even, add to this position. So if the market goes down or the market goes up and volatility spikes a little bit more, then I can probably add to this position and be like, you know what? I sold one print and I've sold one volatility and it's printed against me. I'll sell it a little bit higher and I have a cushion of, this is like a 20 lakh account, 20 to 22 lakh account that I have that I use for these experiments and punts and discretionary musty essentially. So I can afford to put more positions on, So what we'll do now is if you have questions, I'm happy to answer about this. So let's do something here where as a beginner, right, it's a lot easier to uh, between like 21 days to expiry and 49 days to expiry, I'll just say, you know what, let's put a trade on 49 days to go. Um, so with 49 days to go, I'll be like, chalo bhai, I can sell a straddle. Um, let's go to Monte Carlo and put this. Arey, kahan gaya? Let's see what my simulation shows me. So I can sell a straddle over here. Or I can start with a strangle. Like let's do a 30 delta strangle instead. The 30 delta strangle will give us, a flatter Vega profile over a longer range of stock price. तो यहाँ पे Monte Carlo करके देखते हैं same. So here, like one interesting difference between a straddle and a strangle is, in the case of a strangle, you have like um, you have a more left, like a more negative skew. So what does that mean? It means that there is a small chance of a much larger loss. तो यहाँ पे मेरा 2.6 lakhs का loss हो रहा है, even though, and in the case of a straddle, let me open a straddle in the other one. Monte Carlo, just keep it at I implied wall for now. So notice that, as I ran this, I have like a 2.5 lakhs of maximum loss I can get when I run this simulation in the case of a straddle. And in the case of a strangle, it's around the same, but itna hi hai na, 2.5. It's around the same. But the interesting thing is that over here, I'm taking less Vega risk, right? My Vega is 4,600 versus over here, my Vega is slightly higher. So if I were to actually have the same amount of Vega risk between selling a straddle and selling a strangle, I would have to sell more than one strangle, right? I would have to sell like 1.2 strangles or something like that. And if you were to equalize the Vega, if you were to equalize the Vega, this would give a much higher loss. Okay, it would be probably like 1.2 times or 1.3 times this. Let's actually do the calculation. So 4642 and 5235, right? So my ratio is 5235 divided by 4642. So 1.12, right? So jo bhi mera, whatever my, let's come over here and let's come over here. So 2,60,000 into, so that would be like 2,93,000. Okay. So a left skew, like a negative skew, just means this, that there's a small chance of a much higher loss. And that happens more often in the case of a triangle versus a straddle. The distribution of your PNL is, so this is the distribution of a straddle. You're getting very quick feedback. Over here, your POP is much higher, but your skew is much, much more negative, right? Everybody with me here? So this is sort of one of the trade-offs of a straddle versus a triangle. So what I recommend, is like a very, actually I shouldn't say I recommend, but what I usually do, if I don't, as a first VRP trade that I put on, I'll be like, you know what, let's sell the 30 delta. And and we want to sell the 100 strikes, not the 50 strikes, because the 50 strikes usually have pretty bad liquidity. So if let's do the 50 strikes first, let's say, okay, let me find the 30 delta triangle over here. VRP underscore 6 Feb. All right. So actually it's not bad. 3 रुपए का spread है. 2 rupees and 3 rupees. In the morning, I saw like 10 rupees. I was like, I just backed the fuck off. I was like, I don't want to do 10 rupees of spread. But more often than not, a heuristic is usually, you use the 100 strikes. So let's do the 100 strikes instead. Sell. And along with this, you can buy like a teeny sort of thing over here just to limit your max loss. Your best case scenario here is that this is going to expire worthless, right? You want this to expire worthless, but it's just, and you are paying up for this, right? Like the walls here are pretty high. So you're paying like a 16 wall for this one. And this is not that high a wall, but this is one of those artifacts of, it's an artifact of the skew, but we're not going to go into that. So let's go to live trade over here. And yeah, let's put this position on. I'll just select mid everywhere. And I'll be like, you know what? My maximum loss is limited. I don't want that unlimited exposure. As a rule, for me personally, I just, it's business insurance for me. Like, just comes from my market making days, that we never used to have more short options than long options. Every time we used to trade, we always used to make sure that we have more long options than short options. But there is a cost for that, right? And the cost comes from just paying up for that volatility. That downside put is pretty damn expensive in volatility terms. I'm paying like 16 wall over here. So let's just select mid and then we like place all orders. Look at analysis. Trade is falling into place. You can also come here and be like, okay, I want to sell it. So notice this. I put an offer for 194.80 and ye ho gaya complete. This is the only one that's pending. I'm not really sweating it. I know it's not really going to move much. The underlying moves much. I'm not really going to lose very much. Yeah, I can just modify it for this. Ask. Modify mid. Chalo bhai, let's pay up. Um, so this is money I'm actually paying to the market maker. This is money I'm paying to Jane Street to get executed, right? I'll wait. I'll wait a little bit. Um, so I am the best ask right now. If I want to like really get it done, I'll convert it to market and give up just like 65 paisa. But every rupee matters here, right? But if it moves too much against me, then I'll can't really play these games. Fuck it. So it is moving against me. What's going on? Mid price. अरे भाई हो जा. 1 रुपया बचाने के चक्कर में मैं 2 रुपए 2 रुपए खर्च दिए. Anyway, so this position is now put on. I wanna hope that um volatility over the life of the option is low. Um, my 1 point spread will give me around 2000 rupees. I'm gonna wait. Um, no, don't trade along, guys. This is not a recommendation. I'm not SEBI registered yet. Okay, so I'm just putting a trade on myself. This is not a recommendation, guys. I have to say that because I've applied for SEBI registration. Yeah, if the application, I think it'll go today or something. But yeah, like this is how I would probably. So what have I done here? Like what I've done here is I've um, essentially um, said what I've said is I don't want to trade zero DT because it's gonna be uh, too much of a roller coaster. ठीक है ना? We want to isolate our effect. We want to put a bet on volatility. I'm getting a much higher Vega. You know, I'm getting a 2600 rupee Vega over here as opposed to if I go to zero DT. Let's go to zero DT, which is today. Um, and if I'm selling at the money, I'm only getting 258 rupees of Vega. Okay, so but my gamma is a lot higher. Like it's um much higher than my gamma in case of. Excuse me. Let's do a refresh over here so that I don't want the gamma. I don't want that stress of the underlying just going apeshit, right? So let's come over here and so this is my gamma is very low right now in the trade that I put on, and this is the gamma of an uh at the money zero DT sell right now, and the at the money options are the only ones that have any juice in them, right? From a time value perspective. So and my Vega is like I'm essentially taking gamma risk. I'm not taking any Vega risk, right? My theta is pretty high. यहाँ पे my theta is really low, but I want to take Vega risk. I have an opinion on volatility. I will always have an opinion on volatility. Um, Yeah, it's a next month iron condor, man. That's what it is. I could have used a straddle, I could have used a strangle, whatever it is, right? More than that, it's care. Why did I put the trade on? That is important, right? It's not for theta decay. I know I have a 1 point, around a 1 to 2 point spread in terms of VRP, and that's what I want to capture, right? And it's not going to be easy. So, VRP trades are really messy. ठीक है? Um, just one sec. I made some like notes I wanted to also cover today. I'm just trying to find those where they are. Where did my notes go? Where did my notes go? DTE. I'll share. There's like one more point I wanted to make, but I just can't find it. Anyway, guys, um, any questions here? Like, see, ठीक है, मतलब at the end of the day, you guys are saying, "Arey, what is he doing? He's selling a monthly iron condor." Yeah, I'm selling a monthly iron condor, but the point here is the why. You know, why am I doing this? And really understanding the why. Um, Once you are comfortable, trading these monthly options where there's not a lot of gamma risk, things are not moving um, too fast. You've learned to stand up and walk. Then you can think about um, figuring out whether you want to start running or not, right? So understand how the game is played, understand it in a more safer, lower risk environment where you have less delta risk, less gamma risk. Yes, the theta is a lot lower, but there's a saying in options trading: Vega wounds, but gamma kills, and that's what we want to. Um, that's what we want to do. We want exposure to Vega. We don't want exposure to um, gamma. I hope that makes sense, guys. All right, are we good? I'm gonna end this now. It's a short one, and we'll connect again next week and we'll look at risk. Let me just look at my time spread का risk क्या चल रहा है अभी. Just it's nothing really, like the market moved up 2%, like 1.5%, and I'm just still standing here. I'll rebalance at some point. If the market doesn't come back down, I'll rebalance at some point. I'll probably add more to this because I have enough juice in my account to actually add to this. Um, क्या अगले सेशन में सब कुछ एक बार समराइज कर सकते हो, फिर उसके बाद अगले टॉपिक पे जाएं, सो जो भी कंफ्यूजन है वो चले जाएगी. हाँ यार, इफ यू हैव कंफ्यूजन ना, व्हाट आई वांट इज, आई एक्चुअली वांट यू टू राइट इट आउट ऑन डिस्कॉर्ड. यार कहाँ कहाँ तुम लोग कंफ्यूज हो. सो वन थिंग आई लाइक इज Akshansh has put like a bunch of questions here, right? And I'm going to answer them. So I'm going to answer them over the weekend, and these are like deep questions because like he's really trying to understand कि यार मेरा P&L कहाँ से आएगा? Like, is it really this? Right? So I'll answer them over the weekend. Uh, 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 Viral is asking, yesterday IV is around 12 to 13, still premiums are increasing or spikes when it's 1 day to expiry. Yeah, fundamentally, IV, okay, let's become very precise. IV of which expiry? Nice, Priyadarshan. Uh, so 6th Feb. Okay. Um, let's look at the IV of 6th Feb. 6th Feb is today. Let's go to new strategy. Yeah, like see, the IV is just so unreliable on 0DT also because things will change. So I mean, it's not unreliable, it's just things will change very quickly. Okay. It's again like you're trying to drive the car at 200 kilometers per hour. Um, yes, Akshansh. Like that's the thing, right? Like as a beginner trader, let me actually answer Viral's question first, right? So again, like this can change very quickly as if there's like a quick move in the underlying, like a 50-point up or down move in the underlying, this will change very quickly. Okay, so but this on a 50-point move, 100-point move, this is not going to change very quickly. Okay, the monthly option, even this is not going to change as fast as this guy, right? So let's understand the dynamics of this guy and this guy first. Once we understand these dynamics, once we really understand them, then we'll get comfortable understanding these dynamics, and there's a lot more interplay happening over here. वही बात आती है कि 20 किलोमीटर पे चलाओ गाड़ी, फिर 200 पे बात करेंगे. Yeah, so Akshash, the answer here is that yes, the VRP exists, the risk premium exists, There are reasons, there are economic reasons for the risk premium to exist. And we're just, as a beginner retail trader who's looking at the volatility lens, and I'm not interested in deploying 3 crores of capital on this trade, right? Um, there are people who are deploying 3 crores of capital on this trade. They have maybe other ways of figuring out, what their forecast of RV is going to be. But for us, we can start with this. It's low risk enough. Like I can start with this. Um, uh, Yeah, Venus. So the new batch is going to start on Feb 14th or Feb 16th. I'll do a vote. Yeah, so you take the new batch first. There's like going to be 9 live sessions there. This is like session number 10 of the first batch. So Hemant, this is based on lesson 5 or lesson 4, where I talked about the existence of VRP and I showed some historical data. And we're actually going to show a dashboard of that on AlgoTest very soon, where you can just take a look at what the VRP has been in the last 3 months, 2 months, 1 month, etc. Okay. So for again, like all the new guys, um, there's anybody who's joined the Discord community in the last 2 weeks, there's a lot of homework for you to do if you want to, or you guys can wait for another 2 weeks, and we'll start the batch. We'll start the batch fresh. Okay. Long story short, long story short is, um, if we are just learning to trade volatility, we are going to look at monthly options. We're not going to look at weekly and daily options. The idea is to become really like have volatility, like understand volatility, have it become second nature to us. Uh, Understand Greeks, how they perform in a 20 km per hour context. And then once we have a really deep understanding of that, we'll all go together in the faster lane. Okay, let's drive in the slow lane first. All right, guys. I'm gonna end this session right now, and let's reconnect again next week, during market hours to see how our how our trade is how our trade is doing, both the trades.
Yeah, I just want a question. Hello.